biggest game changer.
Steve
Every day.
drilled this into my head.
It will accelerate your learning.
Hi, everyone. Welcome to Trader Talk with Disciplined Mind Trading. If you're joining us for the first time, my name is Bobby.
And I'm Steve.
And in this week's Trader Talk, we'll be covering your first year trading CAN-SLIM. This is a topic that I'm surprised it took us so long to cover. I think it'll be really, really valuable if you're somebody within your first year or that's just starting trading CAN-SLIM. And we're going to go into a ton of different topics on what you should expect and how you should be approaching your first year trading CAN-SLIM. Anything you got to add, Steve?
I think this is a really important topic because I think people have the illusion that everybody's successful right out of the gate and they're crushing it and they're going to be, beating the market by 20 points a year, blah, blah, blah. No, it's hard and it takes a long time and it's a process. So we want to help you through that first stage of the process and get you up and running, hopefully a little faster than without having watched this video.
Absolutely. Get right on into it. All right, so for the first topic that we want to cover, we all have different journeys. Take it away, Steve.
Yeah, so basically, we all learn at different points in the market cycle. So Bobby started reading CAN-SLIM 4 years ago. When he concluded how to make money in stocks, the market was at a different point than it was for me. So everybody's introduction into CAN-SLIM starts at a completely different time. And it's very, very random depending on when someone gives you that book. So that has a huge effect on how you interpret and how you begin to absorb what's going on in the market around you in CAN-SLIM. I'll use last year's for an example. Say you completed how to make money in stocks in December. You basically had 2 months to trade. If you finished
December 2019?
December 2019, correct.
Okay.
Yeah. If you would have finished how to make money in stocks in April of 2020, your experience would be different than had you, like I said, finished in January. And if you just finished now, it's completely different than those other three parts. So that's a huge part of it because you're going to think that this is going to be work immediately and be this perfect system that's going to make you millions and millions of dollars. And the market has a big say in how you get started and how you work. So that's a big part of it. Mm-hmm. And I'll give you how I started.
Well, real quick, what I also want to say is just in your life, where you start in your life, whether you're like one of our viewers, shout out Tortoise King, who's, I think he's 16 or 17, starting out at a really, really young age. Obviously you got a lot of different things going on in your life when you're in high school, whether you're somebody starting out maybe like myself who's in their 20s or somebody who's starting out maybe later in their life in their 40s, 50s, or 60s. You're just even your headspace, even just what's going on in your outside life, outside of trading. Maybe you have something stressful going on. Maybe you're just doing really well. You have a job. There's a lot of other factors. Yep, you get an offense, as Steve. So your time's comprised of a lot of other things. There's a lot of other factors that will play into just how you learn, how you execute, and what's going on in your life. So just something to take note of when you're learning.
Ideally, you'd like to read the book in a correction and then have it completed when an uptrend starts and you get a follow today. That would be the best time. Yes. But it doesn't work that way. I'll tell you my example. My first trade happened all the way back in 1990. I was still in college. I had read how to make money.
I wasn't even born yet.
Yeah. Well, the interesting part about and I've said this before about my journey, I started trading CAN-SLIM for a couple of years, and then I completely went away from it, and then I came back. And then I had periods where I was a hybrid, and then I came back. So I bought this company called Software Toolworks. It went up like 250%. I made a lot of money. Like I made so much money that, and I was fully on margin too, which was even crazier. I was in college. I made I want to say like $8,000 to $10,000. It was really a ridiculous trade.
Which in 1990 is a lot different than $8,000 to $10,000 now too.
Yeah.
And then I'm sure where you were in your life at your age, that was a totally a ton of money.
Oh my God, it was crazy. Well, it was so much money. I started taking my friends out I would pull some money out of my account and I would start taking my friends out to dinner like, 2 or 3 times a week. It was ridiculous. Um, so that was my first trade. And I'm sure I've told the story before where after I sold it, I started tearing up and my eyes started welling up and I was crying because I didn't think I'd ever find another stock where I'd make money like that again. And
That's
yeah,
hysterical.
that happens. So emotions do get into this.
Yeah.
Then we have a subscriber that I was talking to, and their first 6 trades, they got stopped out. So
Yeah.
everybody has a different journey. What was your first?
Mine was not as great as yours, but also not that bad. It was actually good. My first stock that I bought was Square, and I think I made 80% or something on my first trade. Yeah, so for me, it was like right out of the gate, it was like, wow, this is working. I had a plan. I had a couple other stocks I had bought that I had gotten stopped out of that I was strict with selling, so I stopped at those. So I had the money. It was just it was pretty seamless the first couple months for sure.
Yeah. So as you
So
can
all
clearly see,
depends.
everyone's first venture into CanSlim is completely different and random
Yep.
depending on the market. I believe
And
you invested in 2017 in the middle of 2017, which the market didn't even have a correction. I don't believe until somewhere in 2018.
yeah, and that's not to say that I didn't have plenty of struggles after that and things like that. We're just talking about how it started the first couple of months. Because believe me, I had a drawdown and all those things, but so that's part of the journey too. But yeah, starting off, don't get frustrated right off in the first couple of months because everybody starts differently. Every market's different.
Yep. Second, learn, absorb, execute, experience the system, but most importantly,
Follow the rules.
yep. I, we're probably going to say follow the rules 50 times on this podcast, but
Maybe more.
yeah,
We should say it more.
yeah, it's literally the most important element of making the system work. You have to follow the rules. You
Yeah.
can't make up whatever you want and just go along with what you think.
Or even half
Yeah.
follow the rules.
Yeah.
You have to be fully committed to it.
But here's where this gets to be difficult, and we have to be very realistic about this. You just learned CanSlim and what it is. You're not going to absorb all of the different pieces. I'll use myself as an example. When I first started CanSlim, all I cared about was earnings per share, relative strength. They didn't have a composite rating at the time. And that's all I did. And I was obsessed with that. All I wanted to invest was stocks that were 99.99, 99.99, 99.99, maybe a 98 in there. And that's all I cared about. And I had actually pretty good performance. But I ended up doing poorly because I didn't pay attention to the M. What happened was, and this is a big piece, and I know a lot of people do this as well. People who have more experience are going to understand exactly what I'm going to say. In fact, today we're in an uptrend under pressure. So my thinking was that the market would collapse under uptrend under pressure, and I had several uptrend under pressures that I began to ignore the system and think, oh, their M for market doesn't work. Their M for market doesn't work. And I wasn't paying attention to it. And then you know what happened when I didn't pay attention to it? I got clobbered.
Annihilated.
So all the gains I made that were massive, I gave them back to the market. And that's exactly what you don't want to do. So ultimately what's going to happen is you're going to gravitate towards a couple of the accurate letters in the acronym. So like me, I was, really just cared about current earnings, annual earnings, and relative strength and those type of things. I was hyper focused on that. If you can start, to me, the most important letters are M, C, and A. I tell every person who starts this system, before you even start worrying about anything else, learn the market. That's the most important thing, because if you learn and can trade the market, then you could trade stocks within the market.
Yep. And I always say to everybody, you've read it once, be prepared to read it multiple times. I read that book every single year. I listen because I have the audio version, which I think you can actually find again now. I think IBD actually produced it. It's not through Audible, but you can buy an audio book version, like a video audio file. You're going to be constantly rereading that book. And even with myself, 4 years into trading, I reread that book. And because I've accumulated knowledge, I can further understand things that were talked about that previously kind of went over my head. So just understand it's going to be constantly read over and over again, and you're not going to know it all right off the bat.
Yep. And what's the next point?
Well, I think it's really to summarize all the things we're about to say. It's building a routine and having just like a good routine to go about.
Yep. 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 So you want to begin with a small watch list.
Well, actually, you know what? Sorry, I did just forget one thing. Cutting your losses.
Yep.
Before we go to the next topic. Sorry,
Yep.
that's why I paused for a second. I realized cutting your losses. I skipped over that.
Yes.
So Steve talked about getting annihilated. The biggest thing about cutting your losses is you're learning. Cutting your losses is that backstop to preserve your capital so you can continue to learn. Because if you don't have money and you can't trade, you can't learn.
Yep.
So cutting your losses along with the C, the A, and the M is the most important thing because you're going to make mistakes, but as long as you cut your losses, you will live to fight another day. Yep. So sorry I skipped over that one little point.
No, it's okay. I was going to get back to it, but you want to begin with a small watch list. No matter what you heard, with great quality companies. If you heard my story, I was focused on the best of the best. All I cared about were 99, 99, 99, 99, 99, 99. And I ended up getting, but one of the things that I did that was terrible is I had basically a watch list of every stock that was 99.99 or 99.98. And it was too unwieldy. What you have to do is you have to get a small watch list of companies you understand, things that you can process. And if something happens, you could understand what's going on. And I'll use an example. One of the 99.99 companies I found was a biotech company. And I truly didn't know a thing. I didn't understand. I just thought, okay, you get a drug approved. Like you submit a drug to the FDA and they go, yeah, okay, you could use it. I didn't understand there's a process and everything else behind it. So I bought the stock that had good earnings, good sales. And the stock dropped literally 30% in a day. And this was one of the stocks, the market didn't even correct, but this helped correct my portfolio. It literally dropped 30% a day. I had no idea what was going on. I was like a deer in the headlights. I couldn't process it. I didn't understand it. It was just one of those things that because I didn't understand it, I didn't have a clue. I couldn't process it. It made no sense to me. It didn't even help me. In retrospect, I kind of understand what happened. But now, in the moment, it just got me frustrated thinking that the market's rigged, hearing all the excuses that everyone has. It wasn't the market's fault. It was my fault. I'm buying stuff I didn't understand that could be volatile, could do exactly what it did. And that's my fault.
Yeah. And for me, I got lucky in like gravitating to what I knew. I used to be an IT recruiter. So my clients were all IT companies or companies that were departments were focusing on IT technology. Most of the employees that I was speaking to on a daily basis were programmers and people within the IT space. So I knew a lot about IT technology, programming, software as a service, and things like that. So that's where I gravitated towards in the beginning, as well as just things that I'd seen around. Square. I had used Square when I went to, go to the store and pay for something, and they had Square as the platform they were using. So gravitating to what you already know will allow you to just kind of also focus on canceling. But throughout that process too, when you do find certain companies, start taking the time to slowly start to investigate these companies and these industries too. And part of that, you're going to get a better understanding of all these industries and companies over time and years of trading and just slowly getting used to investigating companies and building your baseline.
And what other things should you be doing for a routine?
Reading the big picture. This article, this is
every day.
Steve
Every
drilled
day.
This into my head every single day. No questions asked. It's one article. You can read it on your phone. The big picture is IBD's take on the M in canceling. Not only will it give you a snapshot where it will tell you how many distribution days there are, the market direction, things like that, but they also always tie canceling into certain things that are going on. They will sometimes elaborate on why things are happening so you'll better understand what's going on in the market as it's happening. And they'll even talk about some bigger stocks in there too. That article is the most valuable article by far that IBD produces.
Yep. Then what else?
Our show.
Yep.
So once a week, we're going to be breaking down the market. And we will go in things from a simplistic level all the way up to sometimes even a more advanced level. Just looking at the market direction, looking at the industry groups, looking at earnings coming out. Will we make a effort to make sure that if you're somebody learning, you can sit down, watch a show, and get something out of what's going on with the overall market at that very time, which is going to help you learn as things are happening.
You could go straight from how to make money in stocks the week that you get done and start watching our show, and it's going to make a lot of sense to you.
Yeah, you'll understand it.
Watch particularly any of the videos, watch the quick wrap every week. Make that a routine. Yep. What else should you do? What other podcasts should you watch?
IBD podcast. Great podcast. They bring different people on. There'll be episodes that might get a little advanced, but overall, that show it's right from IBD. So you know that the content you're listening to is in line with what you're trying to accomplish. Another great podcast weekly. Throw it on while you're driving. Throw it on while you're doing dishes or cooking, whatever it is. Every single week, you're going to gain a lot of knowledge from that too. Now, we just talked about, obviously, the big picture. So there's something that you really want to stay focused on. What's that, Steve?
Distribution days.
Yeah.
Be very aware of them. Make sure you understand the count, know the count. Really super important. Again,
very, very
follow the rules. The quicker you master the rules, the better results you're going to have. The next part, this is a really, really, really big part, because I think this is the most important part of this whole entire podcast we're doing, because I don't think people understand this part of trading, and it doesn't get talked about as much. Managing your emotions. I can tell you this. I just admitted in a story, I cried. You guys, wait, first of all, when I bought that stock, it was going up, and it was up like 25%. And it was an 8-week hold rule. It was up like 25%. And actually, by the way, it's a model book stock.
Yes, I was going to say they talk. Even somebody who's trading now probably has heard that. In everything. Yeah.
Like Mike Webster and those people for sure.
Yes.
It was up like 50% in like probably the first month or something like that. I was giddy. I was happy. I was like walking around like I was the coolest guy in the whole entire world. I thought I was going to be a billionaire, like one of the first billionaires. Clearly that didn't happen, folks. But again, when I sold it, I was crying. You know what I mean? I was literally had tears in my eyes and welling up and like a big sissy, because I sold the stock. You know what I mean? And I didn't know what to do. It's stupid. So you're going to be, basically what I'm telling you is, before you buy a stock, when you're thinking about selling a stock, during the whole entire transaction, you're going to have a panoply of emotions. And the more that you do this, the more experience you get, the more that's going to subside. But until then, you have to realize you're not alone. Other investors are emotional. Other investors have fear, greed, all the emotions that go with trading.
Let's face it, it's money.
Yep.
And you're looking at your hard-earned money in an account going up and down. And as much as you may tell yourself, I am going to remove my emotions, it's natural. Yep. And it takes a lot of practice and a lot of time to focus on just executing the strategy and to try to ignore what's going on and manage your emotions. It's very, very difficult. Some people can do it faster and better than others, but overall, it's a part of the learning process that you're going to have to consciously, that's a big thing, consciously make an effort to control.
Okay, and then other things. All traders are afraid when they buy, believe it or not. That's a big thing. Traders act like a deer in the headlights when a stock is getting
just
hit.
Going real quick onto the afraid to buy.
Yeah.
I remember when I was learning, like I had that urge to constantly be like, hey, Steve, I'm thinking about buying this stock. And you'd be like, all right, did you do the work? And I'd be like, yeah. And I was like kind of sometimes looking for like a validation of like, all right, you're on the right path. Yep. You just kind of, you have to really just, as long as you're doing the work and as long as you're checking all the boxes and doing what you need to do, you got to just say, all right, I did everything, and have the confidence to just put the trade on. It's very tough.
Yep.
It's very tough, but you'll get used to it.
And I say this, reach out to us if you have questions.
Absolutely.
I mean, we'll try to help walk you through these things.
Yep.
A lot of people act like a deer in the headlights when they get hit. I don't know one trader who enjoys taking losses, but everyone hates to take losses. Everyone's reluctant to take losses. I don't care if you're Mark Minervini, Mike Webster, William J. O'Neill, Scott O'Neill, Bobby Campbell, Steve Macri, we all hate taking losses, and it's a blow to our ego when we have to, but it's part of the game. I'm getting way better at it. That I just look at it as the business and just get rid of it. But that's part of it. People hesitate, and people have self-doubt. These are all things that are all tied in the emotions of trading. Do you have anything else to add?
Yeah. I like to think of this. For anybody who knows our show, I'm big into like meditation and stuff like that, and just a lot of this tough side and emotions, and a lot of it's just being conscious of how you're feeling. And you will be, if you're paying attention to how you're feeling, you will feel that little pit in your stomach, whether it's buying a stock, selling a stock, whatever it is, you'll feel that urge of like uneasiness. When you feel that, the important thing to do is take a step back, do the work. If you're afraid, I don't know if I should buy this, take a step back, relook through the stock, relook through the chart, relook through all the information, check through some of your notes on how to make money in stocks, and just say, all right, am I doing the right thing? Make a decision. Same thing with selling. If you're afraid to sell, you feel like uneasy about selling, take a step back, look at what's going on, and make a decision. At the end of the day, you're going to make mistakes. It's part of the process. You're going to keep learning. But whenever you feel that uneasiness, just take a step back and make sure that you're acting on the right information, and then you're not allowing the emotions to make the decision for you.
What's the next topic? Your favorite?
Review your trades. The reason this is my favorite is I always I've done it before, looked at the reviews of how to make money in stocks on Amazon. People who don't think how to make money in stocks works, and even some of our viewers who started off being very hesitant about how to make money in stocks, they struggle and they go, it doesn't work. And my response is always, have you reviewed your trades? 90% of the time, no, I haven't. Review your trades, because more often than not, when you take a look at trades that you made in the past week, month, year, or more, you will see, now that you're detached, you probably did not execute CanSlim right. And that's why it's so important for two things. Number one, to follow the rules, because it allows you to pinpoint the mistakes you made in CanSlim. If you start doing 20,000 things at once, different systems, buy and hold, value investing, it makes it very hard to review your trades. If you follow the rules, stick to strict CanSlim, and then review your trades, you're going to be able to identify where your gaps are in your trading, and it's going to make it much easier, much faster to learn. But always defer to reviewing your trades, and not that the system doesn't work, but you're learning and you might have missed something.
Okay,
that's what I have to say about reviewing trades.
Two phrases: extreme ownership and accountability mirror. That's what reviewing your trades allows.
Yep.
You'll hear those. We've discussed those topics a million times during these podcasts. Go back and listen, and you'll understand what extreme ownership and accountability mirror is.
Extreme ownership.
There you go. Yep. Okay.
Right out of the Jocko book.
Yep. Okay. The journey. Part of what you have to understand, and we said it earlier, and I love this word. Learning is a fractal. What do I mean by that? You learn a fraction, a little bit, and it's incremental. It happens in small increments. So you're going to, like I said, you're going to pick up a couple of the letters in CanSlim maybe in your first 6 months. Then the other letters are going to pick up in the next 6 months. Then you're going to understand how to read charts, and everything is going to certainly come together at some point. When it's going to happen, I don't know. For certain people, it happens to them in 6 months. Other people, it's a year. Other people, it's 2 years. Other people, it's 5-6 years.
Depends a lot on how much work you put in. There are some people that are doing it passive. I've had friends who've read the book here and there, looked at a couple charts, did a little bit of work. And then some of our viewers that have reached out to us, I mean, they are putting hours a day in right off the bat. And their acceleration is going to be much, much faster. It's just like anything in life. The more work you put in, the faster you're going to learn. It's just like anything.
Yep. So let's go into the next topic.
Okay. So this is something that I recently came up with, a little bit of like an analogy that I think fits perfectly. And it has to do with driving. So how to make money in stocks, and reading that book is phase 1. That is the absolute first step in becoming an expert trader like a Mark Minervini, a David Ryan, a William J. O'Neill, a Mike Webster, getting to that level is where you're getting towards the top end of trading. And it's no different than driving. How to make money in stocks is essentially like driver's ed for the trader. That is your learning the basics of the overall market, trading stocks. You're learning what a chart is. You're learning how to read a chart. You're learning the bare basics on how to learn. Then, after you learn that, you're going to start to expand upon that. It's just like you don't go through driver's ed, start up a car for the first time, drive out into the road, and expect that you're going to be a Formula One driver. You have to take the years and years of work to build upon that knowledge that you got in driver's ed. So take all that initial knowledge, start building upon it, and understanding to get to that pinnacle level that you want to be is going to take years and years and years of work. You don't pull out of driver's ed and become a champion one Formula One racer. Champion Formula One.
Yep. It's taken some of the best traders years to learn this. It took Mark Minervini 6 years to become a profitable trader and an excellent trader. The better you manage your emotions, the more you follow the rules, that will make this journey easier.
Yep.
The key to canceling investing is that it's a process. We've said it like 10 times. We're all in the same boat. But also the other thing is, and this is, I know it's hard for people to realize this, we're all learning. We're all in the same boat. We're all trying to find new companies in new industries that are on the cutting edge. We're all constantly learning, from new traders to advanced traders. The only way you're going to progress is by following the rules and staying disciplined. Yes, you can get lucky and deviate from the rules from time to time. Everybody does it. But it ultimately is going to result in a period of very poor performance. In addition, engaging with this factor is probably the biggest game changer because of social media. You can hate on social media, but social media has allowed this community to get tighter and tighter and tighter. You can text, you could go onto Twitter and get tweets from Mike Webster and Mark Minervini. You could get their comments. You couldn't do that 10 years ago. Those type of things and you could see what these guys are thinking. Getting engaged in the CanSlim community. This is so hugely important. It will accelerate your learning as an investor, and as a CanSlim investor, this is unique. We do not think normally, so it's important that you engage in the community. Once you become a CanSlim trader and you begin to think about the way CanSlim traders, you're going to think differently. It can be frustrating because the whole world is going one way, you're going another way. Being part of that community will calm your brain down. We'll see that you're not different than the other CanSlim traders. You're different than 99% of the world, but you're not different than the CanSlim traders, and this will greatly speed up your process of becoming a great trader.
Yep, the last point, and you just touched upon it now, but I don't know if we really hammered it in enough. It's, again, you're going to be thinking different than the average trader. You have to block out all the noise. Turn off the news. Turn off CNBC. If you're on all these social media sites, get rid of all these value investors, all these buy and holds, all these meme stocks. Get rid of all that content and ignore it. And even in your average everyday life, just refrain from talking stocks with anybody. Just be silent about it. It's just going to distract you. It's just going to get you all wound up. If it's not, there's no value for you right now to be going and talking to your coworkers about stocks. Focus on yourself, focus on learning. And I'll leave it with this. I say this all the time in a lot of our episodes and a lot of our quick wraps. If you trade like the average person, you're going to expect average results.
You're going to get average results.
You're going to get average results. You should expect and are going to get average results. If you trade differently and you trade using a proven rule-based strategy, you're going to see that outperformance, and it's just going to take it some time and some effort over some years to get there. So
the two most important things to summarize this podcast are understanding the emotions you're going through and engaging with the community. But if you engage with the community, you're going to see that everybody has the similar emotions that you do, and you'll begin to go down this path, and it will speed up your process of becoming a really good canceling trader. And if you could do that, you're on your way to success, and you'll just leave a lot of frustrations behind. It will be an awesome journey.
Yeah. Well, speaking of community, Discord. That is by far the best way to join a community. And the reason being is it's a room with canceling traders. There's no outside noise. It's just canceling. It's just stuff that's going to line up and be in your realm of what you're trying to accomplish. So there is always a link in the description of every single one of our videos. Click that. You guys could join. And feel free to ask questions. Everybody, don't be intimidated. Everybody is at all different levels, and it's just open to answering questions. So as well as Discord, you got our email, our Instagram, both of our Twitters. Reach out to us there. Like Steve said, DM us. We're always open to having conversations with everybody about what's going on, what they're going through, or questions they have. We're here to help. So that's all I have. Steve, what do you got? Anything else you want to add?
Endure the pain of discipline.
Stay disciplined.